Welcome to the Small Business Tax Savings Podcast, powered by Jetro. Each week, we bring extremely valuable accounting and tax tips specific to small business owners. You will be on your way to growing your business and putting more money in your pockets. Here's your host.
Hello, small business owners, and welcome back to another episode of the Small Business Tax Savings Podcast. Today's topic is going to be on the coronavirus, and specifically, we're going to be talking about the Employee Retention Tax Credit. Now, before I get into that, this episode is brought to you by Jetro, a digital accounting firm servicing business owners around the country, helping them relieve stress around financials and save thousands in taxes. I am your host and founder of Jetro, Mike Jesowshek. Now, again, today what I want to talk about is the Employee Retention Tax Credit, or the ERTC. We've been talking a lot about stimulus checks, the EIDL, the PPP, and all these other kind of relief options. However, this is one item where we haven't gotten too far into, and that's the ERTC, or the Employee Retention Tax Credit. And the reason that we haven't touched on it is that for many, the PPP is the big money option. But with that being said, the PPP might not be the best option for everyone, and that is where the ERTC comes into play. So I want to go through some basics of this tax credit and to see if you might be eligible so you can start to run some of the numbers. Now, in order to be eligible, you'll need to prove one of two things. First, you suspended operations fully or partially due to a COVID-19 related shutdown. So that's item number one. Or you have a 50% or greater decline in revenue in this quarter as compared to the same quarter of the prior year. So it's one or the other or both. But the example of the item number two would be, let's imagine that you had $120,000 in revenue or sales in Q2 of 2019. And now here in Q2 of 2020, you had $45,000 in sales. That's a greater than 50% decline. You would be eligible. So again, in order to be eligible, you need to prove that you either suspended operations fully or partially due to a COVID-19 shutdown order, or that you show a 50% or greater decline in revenue this quarter in 2020 as compared to the same quarter in 2019. Now, this credit is a refundable payroll tax credit of 50% up to $10,000 in wages per employee. So essentially, the max is $5,000 per employee. This credit does not have to be repaid back, and it is easy to claim and applies to all payroll from 3/13/20 to 12/31/2020, assuming that you meet these eligibility requirements in that specific quarter. So it doesn't have to be repaid back, and it applies to payroll between March 13th of 2020 and 12/31 of 2020. The ERTC is fully refundable, and it is applied to a portion of payroll taxes paid by the employer. And so the IRS is depending on you to self-report these tax credits. You would do that on line 13 of Form 941, which is actually a quarterly payroll tax form. And if you have credits, the ERTC credit that's in excess of your tax bill that you're putting on the Form 941, you will fill out Form 7200 to apply for those additional credits as a refund. Now, it's important to note that the ERTC is not available if you received funding under the PPP program. It's a one or the other type situation. So I want to go through some examples of this specific credit and to show you how this might work. So let's assume that an eligible employer pays 6 employees $10,000 each in the eligible time period for quarter 2. The ERTC would be available to the employer would be $5,000 per employee. So 50% of that $10,000 paid for a total of $30,000 tax credit. Now note, if the employer paid those same 6 employees an additional $10,000 in quarter 3, they would not qualify again because they've already reached that $5,000 credit max. And with that same thought, let's assume that an eligible employer pays 6 employees $12,000 in Q2. The ERTC credit would still just be the $5,000 per employee since it's only on the first $10,000. Now, finally, let's go through another example. Let's assume that they paid an employee $8,000 in Q2 and $7,000 in Q3. They would get a tax credit of $4,000 in Q2, 50% of the 8, and then in Q3, they would just get a tax credit of $1,000 to bring up to that max of $5,000 per employee. So we are seeing that this is a viable option in exchange for the PPP. So what I'm always recommending to clients is do the calculation for the PPP, do the calculation for the ERTC, and find out which is going to give you the better benefit. A lot of times it's the PPP, a lot of times it's ERTC. Now, we don't know where the funding is going to be with the PPP. So if that's not an option for you, think about this ERTC as sort of a backup option. So again, just kind of wanted to go through the employee retention tax credit. To be eligible, you need to have suspended operations fully or partially due to a COVID-19 shutdown order, or a greater than 50% decline in revenue as compared to the same quarter in the prior year. And the payroll tax credit is a refundable credit of 50% up to $10,000 of wages per employee. So the max is a $5,000 credit per employee. It doesn't have to be repaid back, and it applies for wages which you are eligible in a period where you meet one of those first two requirements, anytime in a period between 3/13, so March 13th of 2020 to December 31st of 2020. And you would apply for this credit. It's something that you self-report on Form 941, which is a quarterly payroll tax form. And if you receive credits in excess to what your actual tax bill is, you can fill out Form 7200 to apply for those credits as a refund. Now, again, it's important to note that the ERTC cannot be combined with the PPP. So it's one or the other type situation. So do the math on both options. And again, just a quick example. Let's say you pay 6 employees. You're an eligible employer during an eligible period. You pay 6 employees $10,000 each. You would get an ERTC available for $5,000 for each of those employees for a total of $30,000. So I hope this was helpful. This is kind of that third piece to the option. When we talk about the EIDL, the EIDL, we talk about the Paycheck Protection Program, the PPP. This is another one to throw into the fold. And as we see a lot of companies struggling to reach funding using the PPP, this might be a really good option that you might be able to utilize. So I hope this was helpful. Continue to send questions as you have questions on this. Join us in the Facebook group. There's been a lot of good questions on there that are following up. I know this is a tough time. My goal is to just try to bring as much information to you as possible. Thanks again for listening to another episode. Stay safe, everyone. I will see you guys next week, and be sure to keep your head up. We're all in this struggle together. Now, one last thing before I go. Don't forget to check out our podcast website at www.taxsavingspodcast.com. That's taxsavingspodcast.com. This is a great resource to go and check out our most recent episodes, as well as find extra items if you want to take what we discuss here and dive deeper. Again, also join our Facebook group where we share tons of value, and you have the opportunity to bring situations you are faced with to the table, and we'll help you out in that Facebook group, and other business owners will support you as well. You can join by simply searching in Facebook for the Small Business Tax Secrets group. Again, it's a Facebook group called Small Business Tax Secrets, and there should be a group that pops up that you can join.
This has been another episode of the Small Business Tax Savings Podcast from the team at Jetro. If you enjoy our weekly episodes, please leave a review on whatever platform you listen to us on and share with other business owners. If you have any questions or future topics you want to hear, email them to tax@jetrotax.com. Thanks for listening and have a great day.